Hello guys, welcome to Cajolitical. Today we are going to start with a new chapter, Audit of Items of Financial Statements. So basically this is the most interesting chapter I would say in C Enter Auditing. This teaches you the practical base of audit which you will be doing in your articleship. So the more you learn, the more you understand this chapter, the more it will be useful for your practical training. So when I talk about audit of items of financial statements, okay, so what is the general understanding? The general understanding is the items of the financial statements. So the name is the audit of items of financial statements. Okay, audit generally means checking, verifying, okay, giving an assurance about the work, that is about the assertions which are made by the management. Items of financial statements. What do you mean by financial statements? Okay, so you will be having a general understanding of what financial statements is. Generally a preparation of financial records. It contains the financial performance and the financial position. So financial statement consists of five things. Basically the traditional, the trading account, the P&L account, okay, balance sheet, cash flow statement, and statement of changes in equity. So items of financial statements. So the financial statements are prepared in accordance with schedule 3 and in accordance with applicable financial reporting framework. So whatever the financial statement which the management is preparing need to be audited. So items which are included in the financial statements needs assurance from the third party, in a sense the auditor, who is going to give an absolute assurance. Okay, so you all know the basics, right? No, we studied in the first chapter. Absolute assurance is not uh, perfect assurance. It's a high level of assurance, but it is not 100% assurance. This is due to the inherent limitations of audit. So if you have not seen those basic videos, then you can kindly watch those videos first and then get back to this. So today now I'm going to just create a base for this chapter. So the name itself tells that we have to audit and have to challenge the assertions made by the management, the figures which are given by the management in the financial statements. Okay, so what are assertions? So today's video is all about understanding the meaning of assertions. Assertions are basically you know see, as we know, it is the responsibility of the management to prepare the financial statements, and the responsibility of the auditor is to audit it. Okay, so while preparing the financial statements, the management make few assertions. Okay, so there are two types of assertions. One is balance sheet wise assertion and the other is P&L assertions. So if we talk about balance sheet assertions, there is completeness, existence, accuracy, valuation, rights and obligations, and presentation and disclosure. So these are the balance sheet assertions. So you have a small, form for that. CWOP. C stands for completeness, cutoff. Okay, E stands for existence. A stands for accuracy, V stands for valuation, O stands for rights and obligation, and P stands for presentation and disclosure. So what is completeness and cutoff? Completeness, in a sense, the management will tell you, while giving you the financial statements for audit, it asserts you, okay, that all the items during the financial year, say 1st April till 31st March, are completely shown in the books of accounts of the company. Everything is shown, all the transactions are recorded. So when the management asserts that, the auditor need to challenge that assertion by performing certain audit procedures. Okay, so there are no, what the thing is, there are assertions. Okay, for each assertions there are audit procedures. So the audit procedures for each assertions will be covered in the next video. So here we'll just see the outline of what are assertions and how the few examples of assertions, just a outline. Okay, so I just don't want to put up everything in one video and mess it up. So just we are just gonna see the outline. Okay, so first assertion, what I told, completeness. Okay, so whatever is there is completely recorded in the books of accounts. Okay, this is one of the assertions of balance sheet, C. Okay, and one more is cutoff. Cutoff, in a sense, say all the transactions of the current year are recorded in the current year. So this I will explain you in detail when I come to P&L account assertion, especially sales. Okay, so next assertion is existence. Existence, for example, say if the management is stating that I have land and building worth so and so, and say 5 crores in my balance sheet as on 31st March. So my duty as an auditor will be to challenge the assertion of the management which they made for that 5 crore rupees. So I have to assert to the management that yes, this I have to challenge their assertions that yes, this was or no in the name of the management, and it existed. Sorry, it existed in the existed as on date. Okay, so if you talk about existence assertion, it is only for balance sheet items and not for P&L items. If you talk about P&L items, instead of existence, it is occurrence, because you don't tell a P&L account as on date. Okay, it is a run. So existence, in a sense, it existed in the period, in the audit period, during that financial year, in the books of accounts, so that the management is stating that in their financial statements, and the auditor is supposed to give assurance about the figures and the the existence of the item. Okay, so next assertion we talk about is accuracy. Here we talk about the how accurately the management is recorded. How accurate is the amount which is stated by the management in the financial statements, on which various stakeholders, investors and government trust and invest their amount. Next is valuation, rights and valuation. So there are many accounting standards, okay, in the AS, on which valuation rules are given. So the management will value the assets based on these rules and regulations, as it is the duty of the management to know the FRF and prepare the financial statements. We as an auditor will just check. Say for example, there is AS2. We have to record it, cost or NRV, whichever is lower. This is one of the example of valuation. So we have to check whether it has been recorded as per the rules, whether it has been valued appropriately as per the applicable accounting standards. Whatever. Okay. So next is rights and obligations. So whatever management is stating in their balance sheet, we have to give an assertion that the management have the rights and obligations. Say the management is stating land of say 20 crores. Okay, we have to check whether that land is in name of the company or not. Okay, the last one is P presentation. So all these are the checking. The presentation is the disclosure. This presentation and disclosure. Presentation in a sense whether everything has been presented as per Schedule 3 of the Companies Act 2013, and disclosure. Okay, so this is a general outline of assertions of balance sheet. So the next video I'll try to make sure that I'll fit into you the assertions of P&L items. Thank you guys, thank you for watching. Till then, like, share and subscribe. Thank you, enjoy your day.